Welcome back to our channel, where we delve into the fascinating world of personal finance and investing. If you're eager to secure your financial future, remember to subscribe and hit that like button to stay up to date with our valuable insights. Today, we're diving deep into 8 critical questions that can set you on the path to financial success. How much money do you need to retire? This question often terrifies people, but it's an absolutely crucial step towards securing your financial future. The calculation is relatively straightforward. Assuming a 4% withdrawal rate, which is considered sustainable, you can multiply your estimated retirement income by 25 to determine your retirement nest egg. For instance, if you expect to need $50,000 per year, you'd need $1,250,000. However, don't be discouraged by the seemingly vast amount, because you won't have to save it all yourself. Most of your retirement fund will come from investment returns, with only a smaller portion coming from your own contributions. If you can confidently answer this question, you're well on your way to a comfortable and prosperous retirement. What are your expected investment returns? Knowing your potential investment returns is vital, as it forms the basis for answering other financial questions. Let's use the S&P 500 as a benchmark, which averages around 10% annually. But remember, this is just an average. Some years it could be significantly higher, while in others, it might be less. Your own risk tolerance plays a significant role in determining your returns. If you're risk-averse and can't tolerate a higher degree of volatility, your profits might be closer to the average. On the other hand, if you're willing to take on more risk, your returns could potentially surpass 10%. Understanding what kind of returns to expect will help you calculate how much you need to save and invest each month to reach your financial goals. How much money should you be investing each month? You may not currently earn enough money, or your bills might be too high, but having a clear goal is essential. You should be able to confidently say, I need to invest X amount each month to reach X amount. To figure this out, consider using a compound interest calculator. By inputting your current savings, your expected investment returns, and your time frame, you can determine how much you need to save regularly to reach your financial objectives. How much cash should you have on hand? It's essential to have an emergency fund. The general rule of thumb is to have 3 to 6 months' worth of expenses saved in a high-yield savings account and around 2 months' worth of expenses in a checking account. However, it's important to note that there's no one-size-fits-all answer. Those with more unpredictable income, such as freelancers, commission-based earners, or those who rely on tips, should lean towards having more cash set aside to play it safe. Having too much cash on hand can also be a problem in itself, since money sitting in a checking account earns minimal to no interest and loses value due to inflation. How much money should you save for future purchases? Determining how much money you need to save for future expenses, especially significant ones, can be a challenging and sometimes underestimated task. Being debt-free is a significant achievement that can substantially free up your money for future needs. However, you must consider your upcoming bills carefully. Let's say you own your car outright, and you don't have any monthly debt payments, but that doesn't mean there aren't costs associated with replacing it. If you don't want to borrow money for a new car in the future, you need to calculate how much money you should put away today for that purchase. If you need $25,000 to pay for a car in cash in 4 years, you should be saving more than $500 a month for that expense. Don't forget to consider other significant expenses, like house repairs and upgrades. It's recommended to plan for these well in advance to avoid incurring debt to finance these purchases. Consider it like making payments to yourself, securing your financial future without relying on credit. What accounts should you be using to invest? If you're like most people, you're lucky if you know what kind of retirement or investment account you're contributing to, let alone the benefits and drawbacks of these accounts. Choosing the correct accounts for your investments is an indication that you've done your homework and understand how to optimize your money. Selecting accounts that don't align with your financial situation can result in significantly less money accumulated over time, as well as a large tax burden during retirement that eats up a significant portion of your retirement income. Ideally, you should understand the benefits and drawbacks of various accounts, such as IRAs, Roth IRAs, 401ks, and others. Knowing which account is ideal for your specific situation shows that you've done your research and are serious about maximizing the money you save. How can you cut your expenses? A financially knowledgeable individual is always searching for ways to save costs. If you can think of a few strategies to reduce your monthly expenses, you're definitely on the right track. You should always be able to come up with a few solutions to lower your monthly spending if necessary. Reducing expenses doesn't necessarily mean a decrease in your standard of living. It might simply involve finding cheaper insurance rates, refinancing your home to secure a better interest rate, or minimizing memberships that you no longer use. You might even consider moving into a less costly home or apartment, taking in a roommate, selling your car if you're not using it frequently, or preparing more meals at home. These are all examples of cost-cutting strategies that could potentially impact your quality of life. You're not required to implement all of these money-saving tactics, but the key is that you're always looking for ways to save money and can do so if necessary. How is your monthly spending categorized? Your income is your most potent wealth-building tool, but if you're not careful, it can be rapidly consumed by various significant expenses that tend to creep up on you. It's essential to understand how much money you spend in an average month, as well as how your money is allocated. Housing typically stands out as the most significant expense for almost everyone who has a mortgage or rent. Allowing this one expense to spiral out of control is almost certain to lead to financial trouble, leaving little room in your budget for debt repayment or investment. Understanding how much of your budget is dedicated to housing is crucial. Transportation is another substantial budget item, followed by a variety of smaller expenses such as food, healthcare, and insurance. It's also crucial to be aware of how much of your money is going towards seemingly insignificant items like subscription services, dining out, and impulse online purchases, which can quickly add up and slip through your fingers. If you know precisely where your money is going, you're significantly ahead of most people who, at the end of each month, scratch their heads and wonder why they have nothing left. Knowing how your money is allocated can empower you to make informed decisions about your spending, enabling you to make more conscious choices to reach your financial goals. If you can confidently answer all of these questions, congratulations. There's an excellent chance that you're well on your way to financial success. While you may not be precisely where you want to be just yet, you're certainly on the right path. Remember, achieving financial success takes time, dedication, and consistent effort. Thanks for watching, and if you found this video helpful, don't forget to subscribe for more weekly financial tips. Leave a comment below and share your thoughts with us. Happy investing!